do have the mutual fund number, so let's just take a look at that. Like Sonal was pointing out, this is the highest that we've seen perhaps ever. This is coming at over 20,000 crores. This is March equity numbers, 20,190 crores. Last month, what we saw was 15,657 crores. So there's a big jump there. For the hybrid schemes, we've seen an outflow of 12,300 crores approximately, but it is really all about the debt funds, right? So I'm just going to pull up that number for you.
We have that number. So the debt outflow is 56,884 crore rupees, which compares with 13,815 crores of outflows. So while you were discussing, right, how last 1 week numbers saw massive inflows, but it ultimately has been a big outflow, so to say, this time around. The highest in 6 months is what this number looks like.
Big outflow, but I mean, compared to what we've seen earlier, it's not quite as close as well. You do see this kind of numbers as well. But your first thoughts, Kalpesh, we have been talking about debt, like you said, you're sick of it, but I still have to ask you, you know, on this kind of number that we have seen. Of course, this was the last week rush in March that we saw. How do you think it's going to fare from here?
So practically, like what you've covered, the thing that the only exciting part was that last week, and everybody wanted to capitalize on that long-term indexation part of it, and they did so. But I think it was around 30,000 crore or something which was there. But the quite the redeeming part or the positive part is the huge equity inflows. So what has happened, probably the way we make from this initial numbers, is there's almost been a 30-35% spike up in that number from the last month figures which have come up, and I could probably attribute it to that the retail investors have really evolved and now understood that this is the time to prop up their equity portfolios, and the markets have really not done well, and they have gushed in this money into equities for that. It also could be a part that some people could have done the last minute ELSS investments which could have come up during that period to complete their ATC allocations. So all that also could be a part of the equity inflows which have been really a great number to look at. So these are my initial reactions, that the domestic investors, the retail investors, I think are evolving a lot. And we pray and we hope that this continues, because this is what is probably keeping our markets, afloat a lot.
Interestingly, we are talking about gold. Gold ETFs this month have seen an outflow. It's a small number, but since we are talking about gold here as well, we'll just hold on, and we also have another guest joining us, Mr. Anthony, the Managing Director and Chief Executive Officer at Mahindra Manulife Mutual Fund, is joining us now. Thank you so much for joining us on CNBC-TV18. Your initial thoughts, the highest number that we've seen in terms of equity flows. What is your take?
Yeah, so very exciting numbers. I think it's, as Kalpesh was talking about earlier, it's a reflection of the maturity of the retail investor. We've had two significant events in terms of SVB and Credit Suisse, and I think that negative news then spurs investors to relook at equities, and the idea is to invest when there is bad news, because in the long term it pays. But I just also want to point out that it's actually been an exceptional month for fixed income. So if you look behind the numbers, it looks like an outflow, but I think all of that outflow is in liquid and overnight funds, which is a typical March end phenomenon. If you look at the net inflows in the longer term bond funds, and you were talking about that earlier, I think we've had more inflows in this month than in the last 12 months put together. Right. So between the long duration funds, the gilt funds, and I think the target maturity funds that get represented in the ETF basket, I think we're looking at something close to 50,000 crores of net inflows in long-term fixed income. And I think that's obviously a reflection of the announcement that came through in the third week of March. And, the fear of missing out, which kind of spurs investors to invest. So I would say an exciting month for both equity and fixed income.
It's been an exciting and eventful few weeks, like we were talking about. And I guess for debt, any money that was perhaps expected to go in the coming, few months is all just rushed in all at once. But another question I have is, specifically since we were also talking about equities, is on the large cap schemes. We've seen an inflow of over 900 crores for large cap funds. This is versus the 350 crores that we had last time. So there's been a big jump there as well. Your thoughts on this, Mr. Heredia?
So I think it's circumstantial. I don't think it kind of speaks to a trend. I think for a while there's been discussion around the fact that large caps perhaps find it toughest amongst all categories to outperform index funds or passives. And I don't think that story has materially changed. So I think it's just perhaps a reflection. Let me put it this way. I would believe there would be erstwhile SIP flows that obviously come into large caps. And if the redemption numbers in that category are lower, it could explain the delta between 300 and 900. But I don't see this necessarily as a trend change. I think the larger equity allocations continue to be to small and mid cap, flexi cap, multi cap, and so on and so forth.
Okay, we'll just come back to you in a bit. Kalpesh, we've seen that this time around liquid funds have seen an outflow of over 56,000 crore. To be precise, 56,924 crore rupees, which compares with an outflow of 11,300 crore rupees. The idea generally was that liquid funds, maybe they could be a good hiding place as well because of the volatility everyone was seeing. Savings interest rates had not been hiked despite the repo rate hike. What is your sense here, liquid funds? Is it something that somebody can look at?
Yeah, surely it should be looked at because right now the spread is very narrow,
exactly,
and there's not much to choose. And between the the liquid category and probably the short term or even extending it to the medium term, the spread is very narrow. So even you're getting a 7.1 or 7.2 on a liquid versus a 7.4 or 7.5. I think liquid is still very, very attractive. And even if you were to stretch that argument further in a liquid fund or a little bit of an ultra short duration fund, compare it to a bank FD also, there's not much to choose from. So, and now the taxation is evened out. So there's nothing much of a differential. So I think liquid funds, even for the next 6 to 9 months, is a great place for people who do not wish to take any amount of risk and want liquidity at their beck and call.
All right, that's on these funds. But another question that I have is on the dividend yield funds. Mr. Heredia, this is coming at 3,700 crores for March versus what we saw last month was around 50 crores. Your take on this category?
It's an interesting category. I think it's a natural transition that the investor community is making from value funds, right? Which is something that saw reasonable amount of interest because, value has in some sense outperformed growth in the last 12 to 18 months. Obviously, dividend yields of the market and obviously the top 100 companies are much higher than they've been for the last 12 to 15 months. A lot of these companies also tend to be in sectors that I would argue seem to be more in favor. And I suspect that explains some of these inflows as well.
Okay, we are still awaiting the SIP number, of course. That is an important number also. It has been increasing more than 13,000 crore rupees for the last couple of months. But Mr. Heredia, thank you so much for joining us today and explaining to us what the flows this time around look like. And